Good morning everyone and welcome back to Morning Markets here at True Potential. Today we're going to update you on the US corporate earnings season, which has just kicked off. We're also going to try and add context to the ongoing sell-off in government bond yields globally. So corporate earnings updates are beginning. We're getting a mixed picture from large corporations in the US. To give you two highlights, Tesla disappointed the market overnight, missing on a number of industry metrics. The main decline was a 44% decline in profits since this time last year. The headwinds for Tesla are the interest rate environment, where they're seeing a drop-off in demand from consumers who would typically use credit facilities to buy a vehicle. And they're also facing pressures from materials costs. Elsewhere on bigger ticket items, somewhat unusually, Morgan Stanley disappointed markets as well with their updates, where they saw a decline in profits from both their investment banking and wealth management division. And the declines in the investment banking division signal that deal making globally is dropping off because of the higher interest rate environment, and it's more difficult for these banks to make fees from facilitating deals. So two big corporations we're all familiar with are struggling, but then two corporations on the other side who are not struggling, and they are Netflix and Proctor Gamble. So these are companies where the ticket price of items are quite small. Netflix typically less than £10 per month. They have been able to pass through price increases and intend to do so again, whilst increasing subscriber numbers, so profits beat expectations yesterday, whereas Procter & Gamble, again, like with Pepsi on the update last week, have been able to increase the price of individual items, have been able to expand margins, and that's boosting their profits. And unlike Pepsi, they've also been able to increase sales as well. So they've seen a real surprise from markets, and the share price was up 2%. So let's all take this back down to the environment for markets. We're continuing to see government bond yields rise. Why is that? Well, the recent rise in oil price is feeding through into market-based inflation expectations. And so we've now seen the two-year yield on the US Treasury rise to a 22-year high. We're also seeing yields rise in other government bond markets, such as Germany, such as Australia, and the UK. And this is really signalling that central banks are in a difficult position. They have hiked rates significantly over the last 18 months, but we know that oil prices, any rise there feeds directly into petrol prices and then directly into measures of inflation, as we saw with the UK in the update there yesterday. So central banks are in a difficult place. The global economy is slowing, and they're going to have to be very nuanced in their updates to markets and to borrowers over the next several months. That's all for today, but please join us tomorrow where we'll update you on events in the US. And please do tune in to our podcast where we'll provide some context amongst colleagues in the investment management team around market ongoings. Thank you.